Sunny, you can start.
Am I audible?
Yes, you're audible.
Good morning, GST champions. Welcome to this powerful edition of GST Ki Pathshala Sunday Special hosted by one and only Pune branch of Vikasa. This is designed especially to empower future CAs and GST professionals with clarity, insight, and practical skills from some of the most respected voices in the industry. Because as theory is important, let's begin the day with a topic that looks simple on the paper but creates maximum confusion in practice. Yes, e invoicing, e way bills, and documentation. Our first speaker for the day is CA Pranjali Tendulkar, a professional who brings clarity, structure, and real world exposure to GST compliances. She is a chartered accountant professionally associated with EY with strong hands on experience in GST compliance, documentation, and indirect tax processes with total experience of 6.5 years. What truly sets her apart is her ability to break down complex GST procedure into clear, logical steps, making them easy to understand and apply. This session is especially important because it is focused not just on rules but on how actually works, as your one small mistakes can lead to notices, penalties, and unnecessary of stress. And today we will learn how to avoid all this and build confidence in compliances. So let us welcome CA Pranjali ma'am with a huge round of applause.
Thank you, Sania. Thank you for your wonderful introduction. As Sania said, I am CA Pranjali Tendulkar. I am associated with EY as a senior consultant right now. I have 6.5 years of experience in indirect tax, including my articleship. And today we'll be looking into e-invoicing, e-way bill, and related documentation. I hope my voice is clear, Sania.
Yes,
Okay,
ma'am.
we'll start. Yes, of course. I'll be sharing my screen as a short presentation. I hope my screen is visible to everyone. Yes. So today we will be covering e-invoicing related procedures, exemptions, everything, e-way bill, documentation, and some case law circulars onto as to how we can get out of certain circumstances when there is some issue with the documentation or practical experiences, etc. in the last slide. We'll start with e-invoicing. So e-invoicing, there's just one user manual that is available on the NIC portal here. Yes. So e-invoicing is a documentation which is mandated by government in order to regularize the invoicing. So as you can see here, this is a pro forma of how your e-invoice looks. So what is the difference between a regular tax invoice and e-invoice is this IRN number which is generated here. This is a unique IRN number which helps the government to trace your invoices. And this is a dynamic QR code which is printed here, which anyone can scan, and they can see basic details of those invoices and make payment through this particular dynamic QR code. So these two things were introduced in order to regularize your invoices so that there is no duplication of invoicing, there is no you know generation of fake invoices. To stop that or to regularize that, in a sense, these two things were introduced. Now going back to our PPT, Yes. So e-invoice is an electronic invoice system. Electronic, we call it because there is this IRN and QR code attached to this invoice. This is generated on NIC portal. So like GST portal, there is NIC portal wherein a taxpayer can register himself, and then every time an invoice, tax invoice where e-invoicing is applicable is generated, the details can be put on this NIC portal, and IRN and this QR code can be generated. When these details are put on the portal, there is a document similar to tax invoice generated from the NIC portal, which has these unique codes, basis which you can proceed with the invoice. Wherever e-invoicing is applicable, there a tax invoice is only held as a valid document wherein the IRN and QR code is present. If these things are not present on an invoice, that invoice will not be considered as a valid tax invoice or a valid documentation. What is the applicability for e-invoicing? E-invoicing is applicable. So initially, when e-invoicing was introduced, it was delayed for certain period of time, but eventually from October 2020, e-invoicing was applicable for taxpayers whose turnover is more than 500 crores. Now, turnover for the purpose of e-invoicing is again the aggregate turnover, that the general definition in GST for aggregate turnover, where we say taxable plus exempt supplies, only excluding RCM supplies. Everything same as the definition of aggregate turnover is considered for this turnover as well. If that turnover was more than or equal to 500 CR, it was crossed, then e-invoicing was applicable. So this e-invoicing was applicable from a higher turnover, and then the turnover kept reducing from 500 to 100 and 20, and now presently it's 500 crore turnover. Why this transition was taken place? One is to consider the load of invoices. Second, to train the individuals. So government was giving time for everybody to get trained as to how the invoices are generated, what is the registration process, what can be the hurdles in on the portal while filing these e-invoices. Also, when these e-invoices are generated on NIC portal, they are transitioned to GST portal as well. So when we file GSTR1 on GST portal, wherever we have filed e-invoices, those are auto-generated or auto-populated in our GSTR1 sales side returns. This helps the government to um, evaluate how many invoices are generated and on how many invoices you are showing GST. So basically, as I initially mentioned, it is to avoid fake invoices. So these two, in the ideal most scenario, e-invoicing and GST portal returns should match. So for that purpose, they have now started to show these auto-populated e-invoicing data on GST portal, and then eventually after filing GSTR1, that particular amount will be paid in GSTR 3B. So that is how the entire flow of e-invoices, GST returns takes place. Then, as I mentioned, to reiterate, the initial turnover limit was 500 CR. At present, it is 5 crore. So anybody whose aggregate turnover exceeds 5 crore, e-invoicing is mandatory. E-invoicing is, as I said, uploading the details on NIC portal and getting the unique IRN number and QR code on the invoices. What are the documents which are covered under e-invoicing requirements? Those are B2B invoices, credit notes, debit notes, export invoices, SEZ documentations. All these kind of documents are require e-invoicing. Now, B2C is a category which does not generally needs e-invoicing. However, the dynamic QR code which I showed you, that QR code is required for B2C invoices, which for the taxpayers whose turnover exceeds 500 CR. Now, this dynamic QR code, this concept was brought in to promote online payments, the UPI payments, which we say. These QR codes were bought in for that. Any taxpayer whose turnover is more than 500 CR is required to give this dynamic QR code, which we call DQR, in their invoices. And for all B2B export credit notes, debit notes, everything, this DQR is anyways mandatory. So these dynamic QR code, if you scan it, you will get basic details of that invoice. Plus, you will get a payment link from where you can make the payment. Now, for B2C, this was promoted, as I said, for you promoting the UPI payments, the online payments by the government. So again, to just summarize, e-invoicing is mandatory for anyone whose turnover is more than a taxpayer whose turnover is more than 500 crores, but only for B2B credit notes, debit notes, export invoices, SEZ documentations, etc. For B2C, which is unregistered supplies to unregistered person, there only DQR is mandatory, not IRN. IRN is not mandatory for B2C invoicing. Only DQR, dynamic QR code, is mandatory, and that too only for taxpayers whose turnover is more than 500 crores. That, and then we come to exempted class. So there are some exempted class of taxpayers who do not require to generate IRN and IRN on NIC portal. Those include banks, insurers, NBFC, GTA, good transport agencies, passenger transport, cinema admission services, local authorities, government authorities, and SEZ units. So SEZ units, when you are supplying to SEZ units, you are required to give an e-invoice. But when the taxpayer himself is a SEZ unit, then there is no mandate to generate this e-invoice. So these are two different things. When I am supplying to SEZ, yes, I am required to generate. But if I myself is a SEZ unit, then I am not required to generate. I'm exempted from this e-invoicing requirement. We'll move to next slide. Yes, as I mentioned, e-invoicing, this is e-invoice workflow module. Just give me a second. Yes. E-invoice flow process. So, as I said, e-invoice is prepared by the taxpayer. There is one offline utility which is available, or if you are on, there are some agencies to which the APIs are given by the government to generate the e-invoicing. If you are on those certain portals, you can generate the e-invoicing from there. So there is, as I said, there is an offline utility or Excel wherein you put in all the details, whatever are required for generation of e-invoice, the supplier name, recipient name, everything is added on that particular offline utility. Then that utility is uploaded on IRP. IRP is the NIC portal. It is uploaded on that. Then IRP validates this information. If there is any error in that information, for example, the GST number is not correct or any other details is not correct, some part which is mandatory is kept blank, or where the slash or dash is not allowed, but you have put some special characters, that time the portal gives an error. After that error is resolved, the file is uploaded on the portal. Now, IRN and dynamic QR code, both IRN is the reference number and the dynamic QR code, the scan code, is both generated. And then the IRP portal gives us the validated e-invoice. And then it becomes a valid GST invoice. As I said, as per Rule 48.4, only, so e-invoicing is mandatory as per this rule 48.4. Once you are a person who to whom this e-invoicing is applicable, none of your invoice will be a valid invoice if this IRN and QR code is not present on that tax invoice. It will be only a valid tax invoice if these things are present on your invoice. So there are some other points related to e-invoicing. As I said, aggregate turnover is our general aggregate turnover definition under GST, which includes taxable supplies, exempt supplies, zero-rated supplies, and it excludes taxes and inward supplies liable to RCM. Now, tax as in GST tax and GST cess are excluded. Then, as I said, the invoice is not a valid invoice if there is no IRN and QR code on that particular invoice. What could happen when your invoice is not a valid invoice? The recipient of that particular invoice may not be eligible to get ITC credit. So, strictly legally speaking, when the invoice is not valid, the person who is recipient of those goods or services will not be eligible to take credit of uh, the goods or services which you have supplied, because the basic document requirement as per section 16 itself is a valid tax invoice. If you don't have a valid tax invoice, then the other party will not be able to, the recipient will not be able to avail ITC. So that is one important thing when it comes to e-invoice requirement, that not only the generator of the invoice, the person who is giving the supply, is the one who is required, who is liable to generate the e-invoice. But at the same time, if he has not generated a valid e-invoice, or if there is any problem with the IRN or QR code, or for example, a person has generated one e-invoice and he has duplicated that IRN and e-way bill illegally for different two invoices, then the issue is not only on the side of supplier, the issue is also on the side of recipient of those goods and services, because a valid tax invoice is a mandatory document to take input tax credit. So from a supplier side, yes, it is mandatory, but from a recipient side also, it is very important to verify any invoice when it comes to the recipient, so to ensure that the credit is taken appropriately. Otherwise, the department, yes, they can issue a order saying that you have not received a valid tax invoice and therefore you cannot take the credit of it. This is a practical um, side mixed with the legal interpretation of e-invoicing and how e-invoice only makes a invoice valid document. So always when you are taking credit and or refunds or anything relating to any invoice, please ensure that you have a valid tax invoice. Please check whether the supplier was a person who for whom the e-invoice is a mandatory document, and whether they have given you an valid invoice with IRN and QR code. Then there's a penalty in to the supplier who whose liability it is to generate the invoice. The penalty is of 10,000 or 100% of the tax invoice, whichever is higher. Also, if there are any wrong things mentioned in the invoice. So, for example, the details which you have mentioned, it may be related to your quantity or description or registration numbers or anything. The officers may charge you a general penalty under GST, which is 25,000 CGST, then 25,000 SGST, and for IGST also it's 25. So it's 25,000 per act. So that may be charged for any particular details. In practical sense, if this is any only minor typographical error or an unintentional error which can be proved, yes, it can be defended in court of law. However, to avoid this situation, it's better to have a valid documentation, and the details that are put on the NIC portal are put in a proper manner to avoid these things. Because as I mentioned, these details are not only printed on your invoice, these are validated from your physical copy of invoice, tax invoice, your IRN details, e-invoicing details, GST portal details. These all are checked at the time of GST audits or any show cause notice issued or any refunds or everything. In all these processes, these multiple sets of documents are being reconciled. And if there is any difference in any of the documents, then the department can surely issue a show cause notice or ask you questions which are then difficult to answer. So I'll just give a short example. For example, any company is providing IT services, and on the tax invoice which is given to the party. If, for example, those were export services. And in the tax invoice, the description of service is mentioned as a tax invoice as per books of accounts, which was issued. The description was mentioned in detail as, IT services provided in relation to the month of May 2025, maybe. However, in NI or during entering on NIC portal, maybe the person who was putting on the details had put a general detail saying IT services, may not have mentioned the month for which the service were provided, or the service were mentioned as other professional services. Then while issuing the refund, or while there is a department audit or something, yes, the department can ask you questions as to why there is a difference between descriptions of two different e-invoicing and your tax invoice. It can be asked, there can be a issue. So it's better to have everything reconciled at the first primary level to avoid the disputes and to avoid the administrative hassle that anybody has to go through because of mismatch of two information between the tax invoice, your books, or NIC. It's better to have one particular data set which is used for all the purposes: GST, e-invoicing, tax invoice, everything. So it's better to have that, and the same backup to in Excels to be provided to the department when asked. Then, as I said, an invalid e-invoice can also lead to invalid e-way bill. So e-invoice is a basic document that then is used. It's so whenever you move the goods from one place to another, e-way bill is to be generated. We'll get to that part in the next slide. But e-invoice acts as a base document for e-way bill also. The print of e-invoice, a valid tax invoice, has to be given during movement of goods. If your e-invoice is not a valid document, if your tax invoice is not a valid document, then your corresponding e-way bill can also be questioned. And as that particular thing is questioned, it may result into detention of goods. Yes, it is the um, you know the last thing to reach, but yes, as we are discussing what can be the repercussions of not having a valid tax invoice, this can be a repercussion. Some of the officers might also deny your e-way bill generation, and therefore that may result into detention of goods. Moving to e-way bill rules, as I said, e-way bill is a document which is generated for movement of goods. So basically, this particular set of document is not based on turnover. So most of the factors in GST are dependent upon aggregate turnover, are basis your turnover, what is your turnover, and therefore that is the starting point for most of the rules, even for registration or supply or applicability of 9Cs, everything. Most of the time, the basic point is your aggregate turnover. However, e-way bill, the basic criteria is movement. There should be movement of goods from one place to another place. So why this e-way bill came into picture was to avoid um, black marketing of certain goods, or transportation. So to avoid uh, black marketing, that is why e-way bill rules came into picture. So for example, I am sending some goods from Maharashtra to Tamil Nadu. Now, initially, when e-way bill were not there, if that particular truck is caught and the documentation are shown to the government authorities, how will they determine whether that particular set of document which is shown to them is correct or incorrect? There was no um, there was no standard thing to determine this particular validity of invoice. So basically, as I initially mentioned, e-invoice and e-way bill rules actually have come into picture to answer this question as to what has to be considered as a valid document. Otherwise, any person can just print a piece of tax invoice and just say this is a valid documentation. How to say something is valid or invalid? to answer this question, e-invoicing and e-way bill came into picture. So this e-way bill, what is the applicability for this? So any registered person who causes movement of goods. So here there are two important things: registered person and causes movement of goods. If these two particular criteria are fulfilled and the goods that you are moving has value of more than 50,000 rupees, then e-way bill is applicable. So in what relation it is applicable? In relation to any supply. Second, important for reasons other than supply. So for what gets fit into supply, we all know, but what are the reasons other than supply? So I'll give you an example. If I'm moving goods from one plant in Maharashtra to another plant in Maharashtra. So to give you an example, if I have a plant in Chakan, Pune, and I have another plant as in a factory in Chakan, Pune, and another factory in Mumbai, or maybe an warehouse kind of a thing in Mumbai. I have to move these goods from one factory to another factory or another warehouse of the same registration. So these two factories have the same registration number in Maharashtra because it's under the same entity. However, because there is a movement of goods involved in this, a e-way bill has to be generated. The e-way bill rules does not exempt generation of e-way bill just because you are under the same registration number. That's where it is important. This line is important that every registered person who causes movement of goods, even when you are sending goods from your own factory to your factory or your factory to office or your factory to warehouse, anything, you are causing movement of goods. You are responsible for the movement of goods, and there that's where you have to generate e-way bill. The only exemption which is given is this value of INR 50,000. This is given to at a material level. This amount is given to ensure that, okay, if not for everything people have to generate this invoices, sorry, e-way bill. So that was the applicability. So in relation to supply, that is, you are making a supply, or even if you're not making a supply but there is movement of goods, you have to generate. And due to inward supply from an unregistered person, so I am a registered person, I am getting some goods from an unregistered person. Even in that case, that e-way bill has to be generated because the one party is registered, so that's where that e-way bill has to be generated. So these are the three things where e-way bill has to be generated. Then it is mandatory for interstate job work and interstate transport of handicraft goods irrespective of value. So this value of 50,000 is not applicable in two cases. One is interstate job work. Interstate is one state to another state. It is sent for job work, and this interstate transport of handicraft goods. So for handicraft goods, there is an exemption to obtain GST registration. However, e-way bill is still mandatory. So even if it's not mandatory to get a GST registration, e-way bill is still mandatory. On the NIC portal for e-way bill, there is an option to get e-way bill for people who are not registered as well. So there are two situations where an unregistered person can obtain e-way bill. One is it is not mandatory for you. However, you still want to generate it on suo motu basis, being an unregistered person. It can be done. And the second is the circumstances where for handicraft goods, it is not mandatory to get GST registrations, but it is mandatory to get e-way bill, irrespective of value for interstate supply. It is only for interstate supply. When you are moving goods from one state to another state, e-way bill can be generated on the NIC portal. Then the next part is e-way bill consists of two parts, part A and part B. Part A are supply details. Supply details are your basic details. Who is the supplier, who is the recipient, what is the GST registration number. If the other party is unregistered, then you can put a URD there. There's option to put unregistered dealer URD. What is the value of goods? What is the tax amount? What is the type of documentation? So as I mentioned in the initial example, when you are supplying goods from your own factory to another factory of yours, in that case there will not be any supply, so there is no tax invoice involved, there is a delivery challan involved. So in that case you have to put the document type as delivery challan. In case of exempt goods, you have to put bill of supply, or in case of job work also you have to put that delivery challan document. So all these document type you have to select. Type of supply you have to select. What is type of supply? Whether it is B2B, B2C, export, SEZ, supply to SEZ. These are the type of supplies. So there is a difference between type of document and type of supply. Type of document is your, as I said, delivery challan, bill of supply, tax invoice. These are types of your documents. And type of supply is supply to SEZ, export, B2B, B2C. These are types of supply. So that entire information will come in part A, which is supply details. Now the part A is to be filled by the person who is causing the movement of goods. When and then the part B is vehicle transport details. So basically why there are these two parts is that part A is always filled by the person who is causing the movement of goods, who is responsible for those movement of goods. However, part B is vehicle or transport details. So it includes your vehicle number, your vehicle type. Vehicle type is again your truck or whatever is your vehicle. That the number in case of um, air transport, bill of lading, your shipping bills. If there is any the road, the vehicle, then road, then shipping. If, for example, your transport type is through ships or railways, then the reference numbers of those particular vehicles are to be included in these vehicle details. These vehicle details can be put by the person who has filled the part A, or can be put by the transporter as well. Any both of the parties can fill the part B, but part A can only be filled by the person, the registered person who is making uh, the transfer of goods. Then some exemption has been given to the state government to make some additional rules in case of intrastate supply. Intrastate is within the same state. So for example, in state of Maharashtra, this value of goods of INR 50,000, they have increased the limit to 1 lakh. However, if the movement of good is from one state to another, this intrastate rules will not apply. This intrastate rules will only apply if that particular transfer is within the state government's purview. So, for example, if I am transferring these goods from Maharashtra to Maharashtra, but somewhere because of mapping of states, I have to pass through border of Karnataka. Okay, so there is one part of Maharashtra which I can reach only. I mean, I can reach easily if I go through some other state border. In that case, no, this exemption will not be given. However, if I am within Maharashtra, I am not crossing any state borders, I am not supplying to any other state. In that case, this particular exemption of INR 1 lakh can be taken for Maharashtra. Every state has its own exemption limits. Again, some of the states have given relief for job work for textile industries, for distance as well. So if your distance is less than 50 kilometers, you are exempted from generation of e-way bill. Again, these are all interstate rules. These are all intrastate rules, not interstate rules, because whatever state government gives is within the purview of that particular state. So this is from a exam point of view, state government rules are not mandatory. So it's fine if you only go through this particular basic thumb rule, that whenever goods are transferred by any person exceeding value of 50,000, that person is required to generate e-way bill. That's the standard rule. However, if in practical sense you are you want to understand, then wherever the registered person is situated, or if you yourself are transferring these goods, then whichever state you are situated, and if it is a intrastate supply, then you can refer to that particular state's law, and it may happen that the goods that you are transferring are not liable to e-bill. So that can be checked in case it is a practical scenario. From my exam perspective, it's not um, really important. Then e-bill validity and extension. Extension of e-bill can be done 8 hours before expiry of e-bill. So why extension can be required? So for example, I have started the movement of goods. I am transferring some goods from Maharashtra to say Nagaland. So in that case, I had estimated a time span of uh, 3 days is required. So here, so I'll first explain how the days are computed in case of e-way. So when it is a normal vehicle, it is not a over-dimensional cargo, or it is not a multimodal transport. What is a multimodal transport? Which includes different modes of transportation, where one leg is ship. So this 200-kilometer limit is for all vehicles except over-dimensional cargo, and um, multimodal transport where one leg of that transport is ship. So for example, I am transferring to a state where there is road transport or railway transport, and then or air transport, whichever is the transport in the first leg, and then there is one part of that transport is through ship. So maybe in between there is some sea or lake or something, there is some river or something which requires a ship. In that case, this 200-kilometer limit is not there, it's 20-kilometer limit. So there are two parts to it. One is, in normal circumstances, 200-kilometer in one day is what the government has given as a standard understanding. For every additional 200 kilometers, there is additional one day given. So, for example, as I said, from Maharashtra, I am going to Nagaland. I have to compute what are the kilometers. And in fact, on the portal also, you can get those kilometers. What are the total kilometers distance between two particular points? And that can be divided by 200. Whatever you get is your day limit that you get. So, for example, the distance should be covered in 5 days or 6 days or 7 days. That you can get basis the total kilometers between 2 points. And that this system is available on NIC portal practically. So whoever wants to check can do that. So that is for normal all scenarios, this limit is 200 kilometers for a day. For over-dimensional cargo vehicles and for multimodal transport, which includes shipping as a mode of transport, this limit goes down to 20 kilometers per day due to the nature of that transport vehicle or nature of the transport mode itself. So shipping is considered a difficult one, so it goes to 20 kilometer per day. Now, how this days are computed, whenever you file this e-way bill, from that day night 12 p.m. From that time, the number of days are computed. So for example, on 22nd December at 1:30 p.m. afternoon, I create a e-way bill. The time limit of expiry for that e-way bill is to be counted from night. So the next day, so basically 23rd December 12 will be the starting point to consider. So whatever timeline is within that particular day is removed from that computation, and from 12 p.m. you have to compute the next 3 days. So for example, for a particular distance, I have been given 3 days. As per this 200-kilometer limit, the time which I get to transfer those goods is 3 days. And as I said, I generate anything from 22nd September at 1:30 afternoon. I get time from 23rd December 12 at night, and then within 3 days I have to transfer. those goods. But in that particular transfer, because there can be any delay due to roads or any other things, there can be some delay, you can apply for extension 8 hours before the expiry of that e-way bill. This provision is kept due to practical nature of transportation services, as I mentioned, due to roads, or because if there is any issue with the driver, it needs to be changed, the driver needs to be changed, or there is any issue with the tire or something. There can be hundreds of practical issues when it comes to actual transfer of goods by vehicle from one place to another person. There can be some halt, or there can be some damage to the vehicle itself. In all those circumstances, you can extend this standard time limit which is given by government, but this has to be done 8 hours before the expiry of validity of your time which is initially given to you. Then coming to the next point, uh, e-way bill is not applicable in case of certain goods. So there is one annexure given to in Rule 138, which includes your LPG gas, even when it's empty. So in both the process, it is exempted. When the LPG gas is coming, filled gas, and where the empty gas is going back, in both the cases, it is exempted from e-way bill. When it's for personal used items, uh, so for example, if I am shifting from Mumbai to Pune, and I have to shift my personal belongings, and I book maybe a tempo truck to transport those goods, in that case, e-way bill is not mandatory for me because those are personal items. Then empty cargoes or containers do not need e-way bills. Non-motorized vehicle. So, as example specifies bicycle, hand cart, animal cart, so bullock cart or anything, horse cart. For all these things, e-way bill is not mandatory. Then there are some exempt goods notified by the government which do not require e-way bill. Then there are special schemes. If the conditions are met, then e-way bill is not required. Generally, these are very stringent conditions. So generally, e-way bills are required in case of job work with delivery challan. Only when there are certain situations which are fulfilled, it's not required. Then, as I said, LPG for household, if it's transferred, even empty, it is important to understand, even in case of empty LPG gases, this exemption is available. Then PDS, kerosene, postal baggage, stones, precious metals, because these are very high value items. So, for example, if there is some jewelry which is transported, obviously it may exceed the 50,000 limit which is given. These are very expensive items, and there is separate state laws for these kind of transfers. For this jewelry, precious stone, there are state laws. So that's why these are excluded from e-way bill rules. Also, in general sense, as I mentioned earlier, these e-way bills were primarily bought in to avoid fake transfers, or black marketing of goods, or uh, goods which are transferred for tax evasion. So for example, I do not want to show to the government supplies of say 2 lakhs, and I am transferring those goods. To avoid that, these rules were brought into picture. So these whatever exemptions that we are seeing are either for personal purposes of common people, which are not business use items, or the items which have separate laws in itself. So these uh, kerosenes or jewelry items, which I said has separate laws in itself. Even the next item which we are seeing, alcoholic liquor, petroleum crude, high speed diesels, these are outside the purview of GST. So these have separate rules in itself. So that's why they are excluded from e-way bill applicability. There are only two intentions of the government to exclude this. Either it's very personal use to not get common people into the purview of this e-way bill and make their lives easier, or otherwise they have separate rules regulation in itself. So in case there are separate rules, then e-way bill is not mandatory for those kind of line items. Then again, goods treated as no supply under Schedule 3, as I mentioned, They are not under the purview of GST, so GST is not applicable on e-way rules are also not applicable for them. Goods are being transported to or from Nepal or Bhutan. There is a special exemption for most of the in most of the laws. These there are exemptions for Nepal and Bhutan as country, even visa regulations. So these are excluded. Then transport of goods by rail, where central government or local government or consignor of goods. Government also, even in case of exempt supplies or exemption of what we say under in 2017 rules, in the notification itself, government services to provided or by the government are in many places exempted. So similar benefit is given to central or state government authorities. This is only for official government use again. And as I mentioned, the lastly, LPG cylinders for non-supply purposes, domestic purposes, it means. Then this is a small chart of what is the applicability of e-invoice and e-way bill. E-way bill in its own sense is only for goods because it is for movement. So it is for goods. For e-invoicing, we check the turnover and type of taxpayer, who is the taxpayer and what is the turnover. Then it is under the rule 48(4). As I said earlier, the turnover limit is more than 5 CR. If it is less than 5 CR or equal to 5 CR, then e-invoicing is not required. For e-way bill, there has to be movement of goods. So I'll give you a standard example, which, a basic question in e-way bill. If I am supplying some goods to a person and the recipient party finds flaws in that particular good. So for example, I supply goods worth 1 lakh rupees, and when they receive those goods, these are mostly issues when it comes to perishable kind of goods or food items or liquid or gas, which are not in the same quantity as they are sold. So for example, I am supplying juice. We take example of juice in a tanker. I'm supplying it and it is worth 1 lakh rupees, and for example it is 100 liter. When it reaches, the quantity that the recipient has measured is only 98 liters. So there is a difference of 2 liters, but the value of goods is still 1 lakh. So in that case, there is a partial credit note which is to be issued because there is a differential quantity which has reached the recipient. In that case, for that credit note, e-way bill is not required because there is no e-invoicing is required, but that e-way bill is not required because there is no movement of goods. However, for example, I have sold some furniture items to somebody worth 1 lakh rupees. And of those goods, the recipient party is saying 2 goods are damaged. I don't want this goods, you take it back. And again, they sent it back to my premises because the goods, they don't want the goods. So in that case, when credit note is issued, yes, e-way bill is applicable because it includes movement of goods. So e-way bill again is only when there is movement of goods. When there is no movement of goods, there is only a credit note or a debit note only from a perspective of only from a commercial perspective, then e-way bill is not applicable. Whereas e-invoicing is applicable on the basis of your document. If your document type is such that your e-invoice is applicable, then yes, in e-invoicing will be applicable even without movement of goods or there is not actual supply. It is mandatory. So why I said not an actual supply is again because of your transfer from one entity to similar GST and then everything. Then we'll move to the next one. These are the document type where e-invoice and e-way bill is required. Here, as I mentioned in the earlier slide, in cases of debit notes or credit notes, yes, if it is related in e-invoice is required. B2B exports, SEZ, everything is required. Bill of supply and delivery challan, no, it's not required because they are no tax invoices. Receipt voucher, refund vouchers, these are all commercial documents. So no invoicing is required, no e-way bill is required for that. B2C, only dynamic QR code is required if the turnover is more than 500 CR. Free of cost goods, yes, if those are taxable goods and those are notified goods, then e-invoicing will be required. For e-waybill, if you see in this column, it is clearly mentioned everywhere that it is only about value of goods and movement of goods. It is not about, moreover, from a supply perspective, as I mentioned earlier, or as it is mentioned clearly in the definition of e-waybill, is only concerned with movement of goods. So in case of bill of supply, for bill of supplies for exempt goods, or delivery challan, which is for same registration supply, even in that case, or job work supply, e-way bill is required, because if the value exceeds 50,000, it is always required. So the practical understanding, which I mean, the practical bifurcation between both of them has to be done as mentioned in this chart. For e-invoicing, check your turnover and type of taxpayer. For e-way bill, always check the value and movement of good. If there's movement of goods and the value criteria is matched, e-way bill has to be generated. Now, again, just to clarify one more point here, in case of e-way bill, it is mentioned that every registered person who causes movement of goods of consignment value exceeding INR 50,000. Here, the word uses consignment values, not turnover or value of supply or anything. Consignment value is total invoice value. Invoice value includes GST amount as well, any cess as well. So it is total invoice value, taxable value, plus whatever is your other charges or your GST applied, your cess applied, everything include in that particular consignment value. This is important to understand because most of the times, if the goods are valued 48,000 on any, for example, if I receive a quotation from my, if I give quotation to somebody of 48,000, most of the times the confusion is that the quotation is 48,000, so the goods do not require e-waybill. However, when you apply GST on that 48,000, it is deemed to exceed 50,000. Or if there is any OP included or any transportation charges, anything which is included in that invoice, the total invoice value you have to see. Only for the purpose of e-way bill, you have to check the total invoice value, not taxable value or the value of goods. So this is a important, I think. Initially, there was a confusion regarding this. I think now at this stage, it is very clear that the consignment value has to include everything, and it is the total invoice value. Then, yes. Then there are reliefs given on some typographical error by the government. So initially, when e-way bill, predominantly e-way bill came into picture, the issue was that the authorities, even they did not have a very much clarity on what is the issue. I mean, what are the issues that can be pointed out. So, for example, as I mentioned, in a practical scenario which I have seen, the type of invoice which was written instead of bill of supply, somebody had wrongly mentioned delivery challan. Now, e-way bill was generated, it was available. However, the type of document which was mentioned in the document was wrong. Now, bill of supply and delivery challan both in itself are non-taxable supplies, right? However, for both the documents, e-invoice is not required. However, the authorities were of the view that because you have wrongly printed the type of document, therefore this particular e-way bill is not valid. This e-way bill is not in relation to the goods that you are taking, and therefore the goods were detained. So in case e-way bill is not valid, the authorities can detain the goods, and they had detained the goods. Now these are high value goods, so there was an issue. So like this, there were multiple issues that taxpayers were facing at initial levy of e-way bill. Even in the current stage, there are many issues that practically are faced. As this was an example, another example is that on the portal there are some character restrictions when you put number, the document number or invoice number. And practically on the tax invoice, the companies do print the invoice as per their accounting system, their ERPs. So for example, in a particular document, there is a number 001 slash 2023 dash something, which is not allowed on the portal. Those special characters are not allowed, or the length of those characters are not allowed on the NIC portal, and therefore on the e-way bill or the invoices, the valid e-invoice, the number printed is different than the tax invoice or the POs that they are carrying. In that case, also um, the authorities used to detain the goods, or in some cases they still detain the goods, because your invoice is not tallying with your e-way bill. Again, there can be issues like the description of goods. The description of goods is, as I mentioned earlier, for services there can be some mismatch in nature of goods, the description which is printed, because mostly these descriptions are printed by accounting team or tax team maybe, and whereas the goods which are actually transferred are responsibility of some other team, maybe logistics team or supply team, sales team. And therefore there is, in some cases, there is mismatch, very basic mismatch in a description of goods. So for example, if we take example of juice, if I'm supplying some juice, and in the actual goods which are I am transferring are carbonated drinks, and in the invoice I have not written it as carbonated drinks, I have written it as consumable fruit drinks maybe. Then in that case there is a mismatch in documentation. And now these are very basic mismatches. It may happen, as I said, because there are two different teams involved in it. In the ERP systems of taxpayer, there is a master which is prepared. There, these kind of things, if you put the part code, that particular description is reflecting, it might happen. There are hundreds of issues that practically can happen. However, the authorities, practically, yes, from their perspective, they may find it odd to have these different descriptions mentioned, and the goods are actually different, all these kind of issues. Yes, the authorities from their perspective, they might be right in pointing out all these issues. And that's where a relief was provided, that typographical error in e-invoice and e-way bill should not attract a penalty and prosecution. Now authorities can detain your goods. They can verify all the line items. They can verify whatever statement you have given is right or wrong, and after that they can issue a order regarding the penalties. Now in higher court, normally in practical scenario, when you respond to the notices, the officer can give you relief, or if there is a bigger mismatch. So for example, as I said, instead of, say, my invoice was delivery challan, however in my invoice I mistakenly have selected tax invoice, then this is a little bigger of a mistake. Even though it is a typographical error, from company's perspective, from department's perspective, there is a difference, because then one thing is liable to tax, one thing is not liable to tax. So in that particular scenario, it might go to higher authority. So there are some case laws also which have cited that. I have just pinpointed a few of them, but there are many practical cases involved in, I think, which covers most of our issues. As I said, if there is a mismatch in document type, there is a mismatch in number, there is mismatch in description of goods, there is mismatch in whatever tagging was given to goods. So there is packing number which is given to goods. For all these things, most of the time there are case laws available which give a practical solution as to whether this can be considered as a typographical error or it cannot be considered. Also, there are reliefs available at higher levels for certain cases. But as I said in the beginning, it's better to be cautious than to fight with the authorities for these issues, because this not only creates issue with regards to penalties and everything, the goods can be detained by the authorities, which is then an issue. I mean, how it works is that wherever your goods are detained by the authorities, you have to make payment of that particular amount to get your detention completed. So get your goods out of the detention, you have to make payment of whatever penalty is levied by the authorities. And the penalties in this case is value of goods, so it is typically very high. So in that particular case, it's better to have all the documents correct when you are moving these goods rather than again paying this penalty. Then when you go to higher authorities, you demand for getting that penalty refunded to you. To avoid all these things, it's better to have all these documents. Plus, to add on to this point, normally when we uh, transfer goods from one place to another place, there is requirement to carry this tax invoice, e-invoice, a valid e-invoice which has IRN and QR code, e-bill copy printed, everything with the transporter. So that vehicle should include all these things. It is a mandatory requirement. Having those goods, having those documents on your phone or on a digital system may not suffice. They have to be printed and given to the person who is driving the vehicle or who is transporting those vehicles. It is mandatory to carry these documents all the time wherever there is a um, checking inspection from the authorities side. So as per again, some of the sundry rules of e-way include transfer of checking of these goods when they are transferred from one place to another. Authorities do have leeway to check your goods when they are moving from one place to another. They can stop the vehicles, they can check the documentation, they can check the goods. If required, they can detain the goods. Again, when once the vehicle which is going from one place to another can be stopped only once and can be only physically verified. Can be stopped multiple times obviously, but they can be verified, physically verified only one time, unless um, there is some information with the authorities that after the first verification there was some changes done to the vehicle, there was some changes in the goods done on the way from the location of first verification to the next spot wherever they are being verified. um, these are the legal things which are even practically evaluated by the officer. So I'll just give you a practical example. If again the vehicle is moving from Pune to say Nagaland, and in the way it was verified in one state, and that state had given a clearance to those goods. Those state authorities had given clearance to those goods, saying that okay, all the documents are valid, the verified goods are also fine, there's no issue with the goods. Now again those goods, now again that truck moves to another state or another location towards Nagaland. However, there is information available with the authorities at the next location that within the two locations there was a stoppage in the vehicle and the goods were maybe changed or removed or added, something like that. Then they have the authority to recheck your goods. If they don't have the intel or something, obviously the person who is driving the vehicle or maybe the supervisor, somebody can explain it to the authorities that the vehicle was already checked, and they can show the valid challans or the acknowledgements which are available from the first verification. These are all the practical things, may not be very beneficial from exam perspective, but yes, practically all these things are very important. Then again, to make a few points, you can yeah, part so we spoke about part A and part B here. Yes, here. So in the basic rules, we spoke about part A and part B. Part A mentions the supply details, and part B includes the vehicle transport details. The part B details can be amended. So for example, if you're changing your vehicle, the part B details can be amended. So for example, as I said, there is damage in vehicle, and then this particular you are shifting those goods to some other um vehicle because the original vehicle got damaged, or maybe there is some issue with the original vehicle and you cannot transfer it. In that, the part B vehicle details can be amended. Now these details can be only amended by the transporter. Once the part B is filled one time, the e-way bill is complete. So the complete e-way bill consists of two parts, part A and part B. When part B is completed, once the entire e-way bill is generated, then the part B details, vehicle details, can be only amended by the transporter, not the person who has generated the e-way bill. Now, once the party details are filled, the e-way bill is generated, the recipient of the goods, can the recipient ID, wherever the registration numbers are mentioned, the party who is receiving the goods will get a notification they will have on their portal where they want to accept or reject those goods, and they can accept or reject. If it is not accepted, it is, and not rejected as well, then it is deemed accepted. That was one. Then wherever transporter has multiple goods of multiple suppliers with them. So, for example, uh, I am a transporter. I have goods from three different suppliers. So it can happen that the value of goods is more than 50,000, but practically speaking, for many goods, 50,000 is not a very big value when it comes to suppliers. So it can happen I have a big truck and I am supplying values more than 50,000 of three different suppliers in my one vehicle. In that case, I have three different e-way bills generated. Now, I can consolidate that e-way bill in form EWB02. Normal e-way bill form is EWB01. I can consolidate all these forms in EWB02, and then I can have a consolidated e-way bill and move my vehicle. This is just a kind of benefit which is given to avoid multiple documentation at transporters' ends, because these practically the many times it happens that the big transporter have these issues that they have multiple goods available in their transportation vehicle. Now again, e-way bill is generated basis your tax invoice. So if I have three different tax invoice, there will be three different e-way bills. It is not, if I am the person who is generating the e-way bill, I am the supplier, I am the registered taxpayer who is liable to generate e-way bill, part A of e-way bill. In that case, I have three different invoices. I will have to generate three different e-way bill. This consolidation is only on the side of transporter who is actually transporting the goods. It is not on the side of registered taxpayer. They have to generate three different e-way bill for three different supplies or three different movements, to be very precise. Then e-way bill updation, once the e-way bill is generated, the part B is also generated, you can change, the transporter can change the vehicle details, but the basic supply details which are in part A cannot be changed once the e-way bill is generated. So in that case, what can be done? E-way bill can be cancelled altogether. Within 24 hours of generation, e-way bill can be cancelled. In practical scenario, it may happen that e-way bill is generated and I have put some document type wrong, something wrong which I want to change, and 24 hours are already expired from generation of e-way bill. In that case, and this is, the cancellation can be done only if there is the movement of goods has not started. If the movement of goods has only already started, then you cannot cancel e-way bill. But if the goods are still in my premises, either I don't want to move those goods, there is some change in plan, or there's something, there is some delay in movement of those goods, I don't want to move those goods right now. In that case, I can cancel the e-way bill within 24 hours. What if 24 hours are already expired? In that case, there is a reconciliation difference between maybe your GST returns and your e-way bill. How GST returns and e-way bill are consolidated by department? Whenever there is a department audit, the department can ask you, the officers can ask you for details of your invoice, e-way bill, and your GST returns. These three returns can be reconciled, and once they are reconciled, they can ask you questions wherever there's a difference, because as I mentioned earlier, in the most perfect scenario, these three lines of documentation should always match. If for some documentation e-way bill is not required, it is exempted, or for some documentation e-invoice is not required, it is exempted, you can explain that. But wherever all these documents are mandatory for a particular supply, and you have not generated one of the documents, or one of the documents is additionally generated. As I said, e-waybill could not be cancelled due to some issues because the 24 hours limit has already expired. In that particular case, you have to maintain a detailed reconciliation because it can be asked by authorities at any given point of time. So practically, when we do these things and we face these issues that 24 hours has already expired, I cannot cancel e-waybill or I cannot cancel e-invoice. In that case, we do maintain this reconciliation saying that, okay, this was the issue, and because of this particular thing cannot be cancelled, but this is not a supply, or I have not done a movement of goods for these things. Because audits normally are started after 2 or 3 years, maybe 4 years of within the time limit, but after mostly 2 or 3 years of um end of that year, audits are started. So that is a huge period between from the date where this activity has happened or this issue has happened and the day when you have to go and present yourself in front of officers. So to avoid that thing, whenever you face such issue that the e-invoice was not able, I was not able to cancel e-invoice or e-bill, but in my GST returns, I had not shown that as a supply, or I had not paid tax on that particular thing because there was no movement, but I was not able to cancel the document. In that case, please maintain a reconciliation, a detailed reconciliation ready to show to officer that this was the issue and therefore there was no movement of goods and therefore it is not a supply, but I could not cancel the e-bill. That was one important thing. Then yes, then there is one more benefit which is given to the transporter. So, for example, if the vehicle is stopped for more than 30 minutes, the transporter or whoever is in the vehicle can upload that particular thing on the portal saying that the vehicle is stopped for more than 30 minutes. This is just to ensure that 200 kilometer or wherever applicable 20 kilometer limit, to ensure to justify the extension or something like that. These things are normally uploaded. This is just a practical benefit given to the transporter. Then, for example, my goods are going for I am sending my goods to the transporter location, and from transporter location, the goods will then be sent to the final consumer. Now, from my location to transporter location, I have sent those goods. E-way bill is generated, but because of some issues, the goods are to be kept at transporter location for some time. So, for example, for say a month, because my supplier of my recipient maybe was not ready to take those goods at that point of time due to some issue, or maybe there are some transportation road issues or some other issues because of which the goods cannot reach its final destination and they are kept with the transporter at the transporter warehouse. In that case, when the goods start their movement again from the transporter location to the final destination, another e-way bill has to be generated. The same e-way bill need not be you need not keep this extending the same e-way bill, and a new e-way bill can be generated when the movement again starts. Now, it's not under the e-way bill or e-invoicing rules, but whenever you are keeping goods in a transporter's warehouse for an extended period of time, you are required to make addition to the place of business because you are keeping the goods in somebody else's premises. As per the registration procedure, you are required to keep the digital books of accounts in at every place of business, but here you don't need to keep those all the books of accounts in the transporter's warehouse. However, whatever goods are available at his warehouse for those particular goods, the documents needs to be there in the transporter's premises, which is added as your place of business. Then if we I mean, these were some of the practical things that um companies face when they actually start movement of goods, or um for example, uh, what if the goods, the e-way bill was generated, the but the goods were not actually moved from one place to another place, or they were moved to the transporter location, but the e-way bill was not updated for the place of supply, because whenever you had started the supply, they were meant to reach the recipient. However, um, due to some issue, the goods could not move out of the transporter's location. In that case, the final location as per the e-way bill is still the recipient's location, but the goods are with transporters, with the transporter. In all these cases, these are the practical scenarios where the companies face problem. As per the e-way bill, the recipient, the goods are available at recipient location, but practically the goods are not there because of some issues. So this is where the documentation, a strong documentation, is required to reconcile all these things, because whenever you will again transfer these goods from transporter's location to the final recipient location, at that point of time you will again generate a e-way bill. Now, as per the original e-way bill, if your recipient already had the goods, then why again an e-way bill was generated from transporter location to recipient? These can be issues when it comes to extensive GST audits or inspections, investigations. These issues do come. These issues are very difficult to face. So it's better to have a very strong documentation or very good hold on e-way bill e-invoicing, because um, on paper this rule seems very easy, as in starting we had discussed, these rules seems very easy, but from a practical standpoint, because these documentations are maintained on a day-to-day basis. I mean, if I tell you about, I mean, big companies, if you go, there are multiple shipments in a day. It's not like only one e-way bill will be generated, 10 e-way bill will be generated. There are thousands of e-way bills that are generated every day. Now, it may happen that there are some mistakes, there are some miscommunications, the goods don't reach on time, e-way bill was not updated on time, there was vehicle number which was to be updated, which was not updated, wrong vehicle number got put in the documents. All these things are practical issues that company face because of the quantum of their transactions on a day-to-day basis. But that's where we say that planning everything is very important at the first stage, understanding what a standard SOP, which we state. A standard procedure is very important to be established when these goods are to be transferred, when e-invoice will be generated, when e-way bill will be generated, who will be responsible to update the part B, whether the transporter understands how to update all these details, whenever the goods are whenever there is a physical verification, how are we coordinating with the officers to show them the documentation, or is the person who is actually transporting the goods understands what documents are to be shown and everything. The supervisors do understand all these things. These are basic standard processes which are to be undertaken when generation of e-way bill and e-invoice is concerned. Then I think that's it for invoice e-way bill from my end. If there are any questions or anything, I'll be happy to take it up. Sania, I think, I mean, from my end, I'm done
Hi.
with the explanation. Yes.
Yes, okay. I think there are no questions so far.
Mm.
So I'll just finish it. Thank you so much, CA Pranjali ma'am, for breaking down these complex topics into practical takeaways. Your session will undoubtedly help us all elevate our GST experiences. We sincerely appreciate your time and valuable guidance. Thank you so much.
Yes, yes, happy to. Thank
Uh,
you.
Thank you, everyone. We will take a break and restart this session at 2 p.m. See you, everyone.
Thank you.
Bye. Have a good day, ma'am.